Good morning, all. I hope everybody's all right. I hope you had a nice extended weekend. As it seems, the markets are beginning the week with a bang. We're getting a decent amount of movement, both in the FX world and in other markets, which is a good thing. I'm assuming that we're going to have an interesting week ahead. So what are the main themes that we're seeing unfolding today? It's basically the continuation of the dollar higher, with, of course, the prominent mover being, you guessed it right, the Euro USD, right? Not that other pairs are doing much better, but definitely the Euro overall and over the last period of time remains the worst performer of the majors. That is, of course. We're now seeing the Euro breaking through the recent lows, right? So breaking through the 1035 roughly low that we had and pushing lower. To put things in context, in order to find these kind of levels, we have to go back to December of 2002, right? Given the fact that we have July of 2022, that means that just shy of 20 years back is where you have to travel in time to find equivalent Euro USD levels, right? With the only big difference being that the Euro back at that point was in a big extended uptrend, right? Now that's quite not the case, right? Now, where would the next downside target be? At 1017, we have the 127% extension of this last bullish rebound higher, right? And then we have the bottom of the channel, which is currently, because of course every single day it moves a little bit lower, passing from 1002, which means that practically in a few days from now, which we're going to need at least a few days. I mean, the Euro is not something that's going to literally collapse. I mean, it's not a cryptocurrency or some kind of a third world country type of currency. That means that until we can even manage to get there, definitely that trend line is going to be passing from parity, if not lower, right? And I think it's an extremely likely scenario, as I was saying on F.A.C.E, that this time around, the Euro is actually going to parity, right? And for all good reasons. So that's the situation here, and that's one of the biggest movers in FX. Of course, the cable doesn't look much better. It hasn't registered a new low, but it's actually testing the previous low at 119.33. But due to the Brexit charade, you don't have to travel that much back in time in order to find equivalent levels in the cable. Actually, if you want to find equivalent levels, you just need to go back to the spring of 2020, right? So barely just above 2 years ago. So, the situation is not that ominous with the cable. The common denominator here is that it's also trading within a descending channel, and that channel's trend line support is currently passing roughly from 116. So technically speaking, easily more space towards 116, although we have the 88.6% fee, but 117.33 as a first area of support prior to the 116 area that we discussed, right? Now, a big technical development, and we talked about it extensively a couple of times last week, is the Aussie USD made a couple of attempts at the end of last week to actually break down from this descending channel and didn't. Today it's making another attempt in my opinion, today has a high probability of actually succeeding to do that, right? Closing comfortably below the 68.20, 68.30 confluence of supports. which opens a lot more downside, with 67 cents being the next downside target. But in my opinion, with the probability of seeing much lower levels than that being rather high, right? And if you want to look at the Kiwi at the same time is triggering the inverted cap and handle formation, which we've said before that it targets 58 cents. So that's the natural target of this inverse cap and handle formation. That doesn't mean, of course, that there is no support until we get to that. There are actually supports. The first one being the 1.7% extension of this rebound higher is at 61.18. We're almost there. And then we have practically the 60-cent level. It's the 161.8% extension, and also a very nice psychological level, right? A rounded level, 60 cents. Another 10 cents, and you have a wrapper in the making from the Kiwi. That's something to talk about, as we did. Now, another big development, in my opinion, is this crude oil, right? Crude oil is making another attempt to break through this ascending channel. I've said before that my bias is that we're probably going to see this channel breaking to the downside and seeing another leg to the downside. Now, we're making this attempt today with quite a big outside black candle. And as we speak, we're pushing the lows of the day. So we've been weak all day long. If you also want to look at it as a horizontal support resistance area, the level to look at is practically 105, 105.20. A break below that, in my opinion, opens a lot more downside, with practically $93 being the next level, although I know it's quite some distance, but crude has proven that it can cover distances in very little time, right? Now, it's not going to be surprised to see that silver remains under pressure because, of course, we know that silver has broken through the symmetrical triangle, and this is a bearish development. And the next downside target is the 19 to 1910 support area. I think that's a very good support area. We're now getting very close to that. Gold, once again, doing better than silver, not doing good, but doing better than silver. But irrespective of that, it has also broken through the corrective channel, and that is definitely a bearish development, and that is definitely an indication that we should be looking towards 1760, which is the next downside target. So metals remain in the defensive as well. You'll see that platinum is also having a very bad day. Not a surprise either, right? We said that there was more space towards 800. Why 800? It's a nice rounded level. It's a horizontal support area. And it's also this descending channel trend line support. So a triple confluence of supports at $800. Probably it's going to act as a magnet and pull price there. And we see what happens from there once we get there, right? USD NOK, as you see, a lot of technical developments out there, breaking through the recent bull flag. I indicated it as such. I wrote it in the weekend analysis. So am I surprised that it's breaking to the upside? Not at all. Next upside target at 10.27. After, of course, taking out the recent high at 10.08, which I think is a matter of a few days to happen. So practically, as you see, everything more or less points in the same direction. Now, if we want to talk about risk assets, the market was higher earlier on the day. It has already reversed lower and is pushing on the lows of the day. Currently at 37.75, in my opinion, a very high probability that we're headed to new lows, either directly or soonish, right? So,
hey, Steve.
Hey, Grega, what's up?
Hey, how are you?
Welcome to the party. I was actually looking forward to speaking to you. I know that you have a good connections with some nurses there.
Yeah.
for
You need few of them?
I need a few of them. Yeah, I tore gluteus muscle yesterday
Really?
in basketball. So send them over to me. They're gonna be
Yeah, but I'm not sure if we will be able to get you on the webinar then.
It's okay, mate. It's okay. I'm pretty sure I'll persuade Blake to take over. How have you been? How's the family?
Very good, actually. We've been mostly away for 2 weeks now, and
Where did you go?
it was the first time after 12 years that I didn't take my laptop with me. Actually, I had
Nice.
it, but I didn't open it.
Nice.
Just looking at some of important emails, and that was it. So
Nice.
yeah.
That's good. That's good. Getting some real relaxation. Where did you go?
But here in Croatia.
Okay,
Like
nice. Nice. Croatia
here.
is nice.
Yeah.
Next year you should plan to come here.
Yeah. We say this each year.
Yeah, but it's up to you.
Yeah, sure. I should plan this for sure.
Okay, why don't you show us what do you have in mind? We're seeing markets trending again quite nicely. We're seeing the dollar being strong. We're seeing risk assets being under pressure. We're seeing commodities being under pressure. We're seeing precious metals being under pressure. So basically, it looks more like a risk-off story and dollar strong story. In my opinion, there are a lot of elements there for this to resume even further. What do you think about it?
Yeah, actually, I see dollar index in trading at a new high, potentially in a.
Why don't you share your screen? Let me stop sharing mine.
I will this. But what concerns me is actually here that we have the 10-year US yields that are trying to turn down. So I'm wondering if maybe, since I see this dollar index trading in a fifth wave, if further weakness here could potentially limit the upside on US dollar in general.
Depends, because don't forget that if we're going into a recession, which I've said a long time ago, it's a very high probability. It is not at all uncommon to see bonds being bid while the dollar is also bid, right?
Yeah, I completely understand that. So we will see when we will get to this phase, if this is actually going to be the case and if these levels will continue to hold. Now, on the longer term pictures, I'm still looking here on euro dollar, okay, to be actually in a final leg of decline. So I'm aware of a drop towards parity, and then you have this 78.6%. So I see this weakness as a final leg of a higher degree trend. I'm not sure how the ECB will react when we come to parity. I still think that they should somehow try to prevent inflation with stronger euro. So if they will take some actions in this direction, I still think that euro dollar at some point will potentially stabilize. But of course,
at some point it will. But for the time being, fundamentally speaking, nothing seems to be in the works to actually do that, right? For the time being.
Yeah.
Of course, things often can change overnight, but we're gonna know if we're seeing a big shift in action, right? Because ECB is so much behind the curve that I think that talking isn't going to do that much. They actually need to take some action if they want to strengthen the euro.
Yeah, definitely. So I'm looking here anyway on the euro trading now in a fifth wave. Okay, it's breaking down. Now there is one idea that we are already in a wave 5, or that this wave 4 would be a little bit more complex in shape. Okay.
Yeah. So we might. You mean we might see some kind of a
rally,
a flat, or right?
Yeah. And the reason is because wave 2 was sharp, and in such cases, wave 4 may not
might end up being more
choppy,
timely, more choppy. Yeah.
Yeah, or quite just more bigger. So that's what I have to consider. Now, I see some very nice support here when comparing the first leg to the current development of this fifth wave. Very nice support could be around 101. So maybe you should not look this like a support, but rather than a next target within this current weakness. So I'm still looking for more weakness, but as I said, I'm aware that this could be a fifth wave, and if suddenly we will see some unexpected bounce, I may know where to look next after the rally. So of course, if the rally would be in 5 waves, but for now, everything is still in the risk of, I'm just aware of where we could be on a higher degree scale. Now, also, as you know, I have been sharing this PIP short 2 weeks back, and I can give an update on this one. Actually, we were looking for this wave 4, okay, which later looks like it could be unfolding even as a triangle. So it was a wave 4 within downtrend, and I've been looking for this break into a fifth wave. And since we are just already at the lows, I'm aware again of potential support. It could be just temporary support for a rally in 3 waves and then even further weakness. But again, looking at here at the higher degree chart, okay, I'm looking at a potential big WXY correction, and you are now in the second or in the late stages of this second part of the zigzag. So we again could be approaching some very nice support. You have these equal legs coming in right around 0.6.10. So it may not be a bad idea maybe to just be aware that price could a little bit stabilize. So I will definitely pull the stops a little bit lower very soon. So if you have any notifications on, make sure to keep an eye on them. The next deeper support would be the 78.6%, which was also this minor spike low here back from May 20. So these are definitely levels where I have to see a response on the bullish side to make sure that we are bottoming. But for now, it's still, as you said yourself, Steve, it's still a downtrend. We have a risk off mode.
Yep.
So definitely we should be prepared on much lower supports to be retested as well. Let me take a look also on, we can look at gold. I'm not sure what's your longer term view on silver and gold. I'm sure that
you know
somehow that you are expecting a rally, but
yeah, but not yet.
Yeah.
I haven't been expecting a rally for quite some time. I remain bearish in the short term, but I don't think that this is going to last much longer. I bought myself a little bit of silver roughly $1 ago, and I want to buy more at 19.10. I want to accumulate actually on the way down. I think these levels have started being extremely attractive for holding silver longer term.
Yeah, I see a very nice support here around 1810. You have this wave C, where it would be equal to wave A. So it's the lower side of this channel, obviously. And at the same time, you can see that looks like that we are in a fifth wave here of this drop when looking down from $27. So it looks like that we are in a very interesting stage for potential reversal. Of course, based on everything what is going on, it's not easy to say if the bounce will come, but definitely is something that we should consider on silver to turn. I still think that by the end of the year, the silver could be much higher.
It's definitely not easy to pick a bottom. That's certain.
Surely not. But that's why I'm looking at the higher degree chart here and looking at this chart. I still think that this was a very nice and clear impulse, and now you are retesting these levels here, 20, 19, 18, which were swing highs here back from the past years. So I think that this is still a very interesting, potentially attractive support. Even if we just stabilize for just a minor bounce back towards 24, I mean, this could be enough to make some money when the rally starts. So I clearly will keep an eye on these markets, and if I see from a trading perspective, if I see a bounce here on a smaller degree time frame charts in 5 waves back above 21 or towards 22, I think that this could be a very nice tradable pattern on the long side. But of course, for now, it's very dangerous, as you said yourself. What I have left, you mentioned also crude oil, right? So crude oil, I mean,
I think the corrective rebound is over. I think we have another leg lower. That's what I think about crude. What do you think?
I'm looking actually on crude oil, firstly on on a big scale, and why I think that we are still having some room for more upside, but maybe not from here, is because I'm still waiting on a retest of these 2008 highs. That's when, again.
Oh no, I agree with you. I'm looking for higher levels in crude,
Yeah,
but
you're
not.
just talking about short term. Yeah.
Yes, but I'm looking for a lower low first, and then a resumption of the uptrend.
Yeah, nice. Actually, I'm looking quite similar here to give you the perspective. So here I'm looking at the wave 4, and as you know, wave 4 could be a flat, could be even a triangle at this stage. Okay, so we are just sideways making this very long pause, which could maybe continue even towards the end of the summer. So what I'm looking at here is, my primary idea is that we are in a triangle. So I'm tracking wave C of this triangle. So it's an ABCD pattern.
Why not an ABC with C being a 5 wave down? Because that's what my intuition says is more likely.
Yeah, I have discount, as you said, is an alternate. But firstly, as a
Okay.
minimum downside objective, in such case, if we are in a triangle, would probably be a retest of these wave X levels. Here around 98. 100 obviously is also very strong, very important level. Now, if we look here, as you said, these 5 waves down, you probably had this picture in mind, right? We have wave A, 3 waves up for a wave B, and now you can see a 5 wave drop. So based on both interpretations, and that's what I wanted to highlight, is that we can expect more weakness towards 98, either for a wave C of that triangle, or maybe even for a break into wave 3 of this 5 wave drop, as you pointed yourself, for a wave C. So we will see how this will play out. Now, if that count, your interpretation would be valid, then let's take a look at some of the levels here. Here around 85.
Yeah,
that would be quite interesting. It was also the former wave 4 here. So very big volatility probably will remain in play here on crude oil.
Very likely, yes.
Yeah. So that's.
What about indices?
Indices.
Yes.
Here, I can look at the S&P 500 here. Still comparing this current drop to the previous one that we had back in 2020. You are now the 38.2%. The quality of these lags comes in around 3,600. So still room for some more weakness here.
Doesn't it trouble you that we've broken through that channel that you designed there?
Yeah, I mean, it's still okay if we consider that here on this.
Oh, so you think that we're currently unfolding an ending diagonal?
Yeah, I mean, this could be quite interesting, because otherwise it's very hard for me to count this as a 1, 2, 1, 2, 1, 2. You know, that's very, very rare. So I'm trying to go with this more probable outlook based on the market personality that we are seeing, especially because of these overlaps here. So I'm looking this to be as an ending diagonal. I'm sure that when Blake is back, when the price will be at these lows, he will somehow came out with the wedge pattern again.
Yeah, very likely, yes, indeed.
Yes, so that's something that we should be aware of, because if we break into new lows here, again, a lot of traders, everyone, media especially,
will be very bearish.
Extremely bearish. And this is something that I want to be aware of, and just be aware that how the market works, moves from pessimism to optimism and vice versa. And we know that when one cycle comes to an end, the new cycle will occur when it's least expected.
What do you think about the most battered markets, which are the crypto markets? In my eyes, it looks like there is a lot more pain coming there. What do you think?
Crypto market, yeah. I mean, this one, we knew this from the start, that, I mean, that these crypto markets cannot recover on itself to the upside if you have these stocks and everything coming down significantly. So
why not already having seen the fifth leg?
Yeah, it could be definitely possible. But
because you have 4 indicated, and then we had a new peak.
Yes.
And yes, I know that can be part of a complex correction, but wouldn't, especially given the parabolic nature of that move, wouldn't it be extremely likely that we already found a long-term fifth leg in cryptos and we're headed much lower?
The first thing that why I'm looking at this,
you know, I'm not talking about this chart. I'm talking about the longer term picture that you were showing. You were showing before. You briefly showed before.
Actually, I'm looking like this. This to be wave 1, wave 2. Let me draw.
You were showing before a monthly chart probably or something, or not?
Oh, it was not the log scale.
Okay.
So I'm looking for this pattern to unfold, meaning that we can still see a fifth wave here, or maybe, as you said yourself, this could be already the high.
Yeah, on the logarithmic scale.
Yes.
On the logarithmic scale, this your initial interpretation looks very likely. But if you look at the non-logarithmic scale, I mean, exactly. This looks like a
yes, but if you go and look into this scale, then I would label these 5 waves up here, and now you have these 3 waves down. And if you look closely, you will see
who tells you that we're currently not in the third leg of a 5-wave move, though?
Because from what I saw and analyzed in the past few years, I saw that cryptos always retraced and somehow stabilized after 70-80% of pullback. Some even
that is 90%. True, but don't forget that when we use terminology as always in a market that has so little history as cryptos and is currently undergoing conditions that it has never found since its creation, that doesn't say that much. We're not talking about an index like the Dow Jones that we have 100-year data or whatever. We're talking about a market that is in essence kind of a baby, you know, that is going through some steps that it has never gone before through, right?
I'm definitely aware. That's why we have to be very careful whenever we are planning to invest in cryptos. So we have to be aware that even if Bitcoin or Ethereum came down to 1,000, that we can still drop another 50% from here.
Of course.
So, of course, that's why we have to be very careful and be aware of how we invest into the cryptos. I still think that if someone have like $100,000 ready for investments, 10% of them or 5 to 10% of them is fine if you invest now, and maybe just be aware to add more whenever we move to the downside, but not less, but not more than in total of 15% of that total amount. So I still think that but you still have to be very selective whenever you're looking into cryptocurrencies. Have some altcoins from that, let's say $10,000-15,000, and also some very important coins like Ethereum and Bitcoin, because those have data who survived the past cycles. So it's very important that you invest into those who survived the cycles and not for those who are here for the last 6 months.
So in any case, based on your main count of how you think this is going, where would you be looking for those to bottom out and turn higher?
I'm looking for the first support here around 19,000 and 20,000. So that's my first support, and on the Ethereum is a very similar levels around 800.
Why not 13,000? That's
where on here on Bitcoin. Yeah, because of that equality that we talked about earlier. Okay, so I always try to go with the wave count that somehow looks to me that I don't go too far with my prediction. You know, I was looking for a wave C down or for a flat correction here that I showed you earlier, and was expecting a move towards 20,000. Okay, so now when we are here, I will not say that no, we are now in a wave 3. It's still a little bit too early because we are now at the levels where I thought that we could potentially stabilize. So we'll see how the market will respond from here. But if we start dropping below, let's say 12,000 or so, then I think that yes, it could be right. We could be in a wave three. But looking for a wave three and this whole structure still to be an impulse rather than late stages of a correction, well, that's a very aggressive call, I think. So I don't want to be too aggressive with my calls looking too far into the future.
If that is to be the case, which would be the downside target?
On Bitcoin, I mean, if we go now into impulse to the downside, probably around 5,000.
Okay, understood.
I think. I mean, but even 5,000.
And what would make you, what type of price action would make you, and what kind of price objective would make you change your mind and consider the possibility of an impulse as more likely?
If we see current drop still becoming even more extended, if we see another, that's a weekly scale, weekly chart. If we see another two candles like here back in June to the downside, then obviously I would most likely go with this look, as you said, for a wave three.
Okay,
so.
Understood. What about we talked about the precious metals. We talked about the S&P, which in my opinion, if we cover the S&P more or less, we have a good idea about risk assets, since it's the the global barometer for risk. We talked about crude and cryptos. We talked about the major effects. One thing we didn't talk about in that field is, what do you think about USD yen? Yields are pulling back. USD yen seems once again to be consolidating its recent gains very close to the prior highs. What do you think is happening here? Where do you think we're headed?
So on the short term or longer term? On the
both.
Longer term, both. On the longer term, I still think that we could see more upside after this pullback. I'm tracking an impulse. Let me show you firstly here a big chart.
Yeah, I also think it's an impulse.
Yeah, it's a very strong impulse. We broke out of this consolidation. We even came close and retested here back early in June. So I think that there is room for more upside into wave C. Wave C should be made by 5 waves before we can say that this slack is coming to an end. And if you look closely here, maybe that's still late stages of a wave 3 extended lag right now. So just be aware of this consolidation into wave 4, maybe towards the end of the year, and then another jump. On the short term, well, notice that there could be a potential wedge here.
Ending diagonal, huh?
Yeah, or maybe even already finished here, since we have seen a new high. But I'm aware of to see a new highs rather than be surprised here at a new high. So I still think that in the near term we could potentially stop, and especially because of US yields, as you said, if this will continue to weaken, then I think that this one will have very hard times breaking significantly higher. So that's probably the first pair that I would pay attention on if we see some changes.
I agree. It's becoming interesting, and this divergence we're seeing has to somehow get resolved sooner rather than later, one way or the other.
Yeah,
right?
Exactly.
Okay, Gregor, thank you very much. Anything else you wanted to talk about?
No, that's it actually. I still have to catch up with some of the data and some of the charts that I have to go through. So I'm sure I will come with more details.
Perfect, mate. Nice to have you with us. Thank you for joining us. Okay, so ladies and gents, now that we've also had Gregor's point of view, the only thing that's left for us to do here is fill in the bias chart. Right, so let me share my screen. And let's go through the levels. So let me bring on the 4-hour charts in front of us. Let me open the bias charts in another screen. I'm going to show it to you after I'm done completing it. And let's pull up every pair one by one on the bias chart. And oh my God. Okay, so clear resistance in Euro USD, the previous lows, right? Roughly 1036. So resistance 1036. Bias unquestionably bearish. And the next support being the 161.8% extension of the latest rebound at 102. Easy peasy lemon squeezy, USD Swiss. Let's pull it up. So here's the USD Swiss. Now, you'll notice, let me refer to the daily chart briefly. You'll notice that the USD Swiss has rebounded from this big rectangle, the rectangle support, right? So we have next upside target being this horizontal support resistance area at 97.25. So USD Swiss 0.9725 being resistance, and this horizontal support resistance area now at 95.90, 95.90 being support. And I have to leave this as a range, and I showed you why on the daily chart, right? The reason why we're seeing the divergence in behavior, to make things very simple for you here, is, where are you? This. Because Euro Swiss is clearly trending, and it's trending lower, right? Speaking of which, it's currently testing the 88.6 of this move. And to remember the importance of this move, that was the low we found 5, 6, 7 years ago. What was it? 7 years ago, yes. So 7 years ago, that morning when the S&P without notice let the floor go. So keep in mind, we've already retraced 88.6% of that move. We're currently testing that FIB level, and the next downside target is the 96.50, which was that low, right? Keep in mind there are differences based on the brokerage firm you look at of what was that low. So you have to keep that in mind. Now, the cable. Let's go back to the 4-hour charts, and let's pull the cable. Here it is. So, cable support very close, 119.33, the previous low. I know it's close, but it's very important. So this is what we're putting down here. Resistance. Now, closest resistance worth mentioning here is here, 21.75. 121.75. Trend, bearish. Let's go to the Aussie. Here is our beloved Aussie. Support, this horizontal support resistance area at 67.50. We are close to it. Resistance, this previous rebound higher at 68.95, almost 69 cents practically. Bias, bearish. And remember why? We talked about it on the daily chart, right? The breaking down. Here it is. Bias, bearish. Kiwi. Kiwi, already trading below its previous low. Next downside target, the 127% extension of this rebound higher at 61.18, 0.6118. Resistance there, 62.50, 0.6250. Bias, bearish. USD CAD. I already have the USD NOK open here, so let's talk about it first. USD NOK. Let me draw here what I showed you already on the daily. There we go. Now let's disregard this fib extension and draw a new one for this new corrective move. There we go. So first resistance, the 1093.50, which is the previous high. We're getting very close to that. Right. Keep in mind that after that we have 1019.30, right? Then we have 1019.30. Yes. So from 1009.30 to 1019.30. Okay. Support this low here. We shouldn't now go below it. 978. Bias bullish. USD Canadian. You can draw a very similar pattern here. Right, there we go. Let's fib extend. 130.78 is the previous high, and that is resistance. 79 actually, if we want to properly round it up. Support should be the back test of this. 129.30. Bias bullish. USD/MXN. Next upside target. We're currently testing the 78.6. It's the 2070. 2070. Support remains at 2026. 2026. I'll have to leave this as a range for the time being. Gold. Currently testing the previous low. After that, we have the 1760 area, as we've said multiple times. 1760 area, and resistance now being at 1813. Bias bullish, I'm joking, obviously. Bias bearish. Silver. $19.10, as we've said multiple times, is the next area of support. Resistance is now this rebounds high at 2020. 2020. Bias bearish. Bitcoin. In my opinion, in some kind of a bearish consolidation, looks like a symmetrical triangle, most likely. Right. Support 18,630. Resistance 20,675. Now, obviously, I'm going to put it as bearish, right? Although keep in mind, we're in a very, very, very short-term consolidation. But because literally, I believe that this can break at any given moment. It's a very, very fragile bearish consolidation. I have to leave it as bearish. By the way, we just got some data. Factory orders month on month up 1.6% versus 0.5 forecasted. So quite a much better number. Will the market move on this? Answer, absolutely not. So as simple as that. DXY. Next upside target, 107.30. The 161.8% extension of this move lower, right? 107.30. Support being from this point on here at 105.60. 105.60. Designation bullish. USD yen. So USD yen. Until proven otherwise, I have to view this recent consolidation as another bullish consolidation. Right. Until proven otherwise. Resistance 136.70. Support 134.35. Bias bullish. Last but not least, the S&P 500. Closest support, these lows over there at 37.40, let's say roughly 37.40. Resistance, this jumps high, which was roughly at 38.55. Designation bearish. There you go. Quite a biased chart, right? Which is a good thing. Which is a good thing. So, yeah, I think we had a little bit of everything today. Don't forget to join. I think, if I'm not mistaken, that there is a chance that Blake is also going to be on the daily roundup. If not, the two of them, it's going to be just Paulie today. Blake is coming back today. I can tell you that for sure. I just don't remember exactly the time. I think he might be back shortly. Anyhow, I want to wish you all a wonderful afternoon. As I said, don't forget to join the daily roundup in roughly 2.5 hours from now. And I'll speak to you again tomorrow. Bye-bye. Oh, one glance, Laura asks, one glance at tags. Sure thing. I wouldn't want to leave you unsatisfied. Tags. Oh, God. There you go. Moment of truth for tags, Laura. Moment of truth. We are at the confluence of supports we were talking about, roughly here, right? Needless to say, a break below this level, and I have to say that so far this move lower looks very impulsive, right? So if I want to be Grega in the place of Grega, right? If you ask me, let's do some Elliott wave analysis for the fun of it. So that's the bullish interpretation, right? A corrective ABC lower. But if you are asking me, I think it looks extremely likely, looking at the price action at the moment, that what we might be getting is 1, 2, 3, 4, 5, right? So keep that in mind. As I said, moment of truth. Pay very close attention to this area. We have this long-term trend line passing from there. We also have a quality target, I remind you, from the first wave lower to the second wave lower here as well. And it's also roughly the rounded 30 level. And we also have practically there the 200 daily moving average as well. Okay. Perfect. So remind me to have a look at it again tomorrow, because this is indeed interesting, right? So let's keep an eye on it. Let's keep an eye on it within the next few days. Okay, thank you, everybody. Have a wonderful rest of the afternoon. Bye-bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.